Your paycheck might be worth a little less than usual this week. That's because the value of the U.S. dollar has dropped to historic lows.
I mean, if you have a devaluation of the dollar of 10%, people have been robbed of 10%. But how can you pursue this policy without addressing the subject that somebody's losing their wealth because of a weaker dollar? And it's going to lead to higher interest rates and a weaker economy.
People think that they've got a new stock bubble. Gold is going up, oil going up, commodities going up, but the dollar is going down and U.S. Treasury securities are going down.
The downside is we're going to see inflationary pressures as a consequence of this.
Let's look at gold prices. Now they're settling well over 1,100 U.S. dollars. Take a look at the dollar. It's getting bashed against the major currencies worldwide. So the United States is the prime printer of this money, and the other countries are just following suit.
Today, Nouri El-Roubini said the dollar's status as a sole reserve currency may deteriorate. Is there really a threat here that's so imminent, and if so, how did it affect your outlook?
The dollar is going to decline as a proportion of reserve assets, but that's going to happen over a very long time.
Countries as diverse as China, Dubai, Canada have all seen their currencies soar versus the U.S. dollar. As a result, they're looking at the U.S. for opportunities, and they are snapping up American businesses at such a rapid pace. In fact, today, 1 in every 4 buyouts involves a foreign firm.
In fact, China recently purchased sizable stakes in a number of U.S. financial services companies, including Blackstone and Bear Stearns. Saudi Arabia acquired GE Plastics for more than $11 billion earlier this year.
And that's the golden rule. Those who have the gold rule.
The Bank of India purchased 200 tons for $6.5 billion, which helped push the price per ounce above $1,200.
This big rally in gold, for example, is clearly driven by this big money printing in the developed countries, and the U.S. in particular. And this rally will last as long as the money has been printed. If they will stop printing money, I guess this rally can easily reverse.
Those who want to continue to inflate will never talk about the money.
You've been printing money. Well, effectively, and we need to do that because our economy is very weak and inflation is very low. When the economy begins to recover, that'll be the time that we need to unwind those programs, raise interest rates, reduce the money supply, and make sure that we have a recovery that does not involve inflation.
If you look at stable prices, you have to look to the only historic sound money that's lasted more than a few years. Fiat money always in. Gold is the only thing where you get stable prices. The middle class is being wiped out, and nobody's understanding that it has to do with the value of money. Prices are going up. So how are you able to defend this policy of deliberate depreciation of our money?
That is really something for Congress. That's not my. Now, it's not the mission. I agree.
Thank you.
Let's ask Peter Schiff, President and Chief Market Global Strategist for Euro Pacific Capital, author of Crash Proof 2.0. Peter, I guess you're having a banner year, if I could put it that way. But what happens specifically to our economy as gold continues to rise? I think you say up to 5,000 an ounce.
Yeah, I mean, first of all, it's definitely not too late to buy it. Don't wait for Crash Proof 3.0 to buy gold. The fact that given all that's happened and all that's likely to happen, the fact that gold is still this close to 1,000, I think it's a great bargain. So people should definitely be buying.
More and more investors in the U.S. are turning from securities and currency to a more solid investment, privately owned gold bullion.
Well, we're seeing about 1,000 people a day now searching the internet for ways to buy gold. And the two big trends we're seeing. First is a common theme that runs through them all, is a distrust of the major currencies, particularly the euro and the US dollar.
Joining me now is hedge fund manager Damon Vickers. He is very bullish on global commodities, including, of course, gold.
We're quite bullish on gold. We are long gold, but our principal exposure is in all the commodities, including oil and gas. And we own some gold in the fund. We would be likely to be accumulating it on weakness. A bull market has broken out, and we feel it's going higher.
Is it a safe haven play, or is it an inflation hedge? What's going on with gold?
Last December, we started talking about gold when it was about $850 an ounce, and that move from $850 to $1,000 was the safe haven play. Since then, we've consolidated in the upper end of the range from $900 to about $970, and in order for gold to really blast off and have the commodity-type parabolic move, it needs to turn into the inflation trade. So with the world markets recovering and all the money that's been pumped into the system, people are starting to smell inflation. And when inflation really kicks in, you're going to see this technical pattern ignite, which we're in the process of, that could yield a move in gold to probably $1,300 to $1,500 an ounce over the next 6 to 12 months.
How are you going to treat gold in the next 24 hours?
Well, I'd love to see gold kind of hang out right below the breakout price, because we did just have a big 3-day move. So at this point, we're going to be watching. So if we could sit here for the next few days and then we blast through 1,000 next week, there is a cycle in gold that kicks in on September 9th. We're going to go after it because we think the first breakout move will be a potent one, and will definitely reward investors that are, or traders that are ready. And then at that particular point, I think over time, gold will get to that 13, 14, 1,500 an ounce. But that breakout trade is going to be very exciting, and you need to be prepared for it.
How will the lives of the American people be affected by the federal government's decision to intervene and try and bolster, as they say, shaky markets?
Well, to pay for all this insanity from Hank Paulson, they have two options. They can either raise taxes or they can inflate the money supply. They can destroy these things, U.S. dollars. U.S. dollars, 30 years ago, they used to be backed by this stuff, gold. Now, thanks to Hank Paulson and Ben Bernanke, U.S. dollars are backed by these bananas. They're absolutely worthless. Anyone buying U.S. dollars today is going to lose money.
Look, as they kill our dollar, it's losing value every day. Meanwhile, the value of gold just continues to go up and up. Don't buy dollars with gold. Buy gold with your dollars. And don't give your gold away to an infomercial by selling it for less than it's worth. Gold is real money, and it's held its value for thousands of years. It will continue to be the only security against the coming economic New World Order.
I buy jewelry, and I buy jewelry from the public all over the nation. And if people are looking to sell their jewelry, come to me, I'll buy it from you.
On an average day, cashforgold.com gets about 1,000 packets of jewelry from all over the country. Each is assayed, paid for, and ultimately melted down. 2 years ago, they had fewer than 15 employees. Now they have 135. Why is business so good?
The fact that gold prices are high helps, but I think what it really is attributed to is people needing money in the trying times of the economy.
Here's the golden rule. Wherever you sell your gold, see what they're going to pay first. And don't expect to get close to the current spot price of around $900 an ounce.
You could see prices anywhere from 50% of spot to 80% of spot based on, how much, again, that you're sending in.
According to some experts, gold's only going higher anyway.
As we continue to see demand strong and as we see production squeeze, we will continue to see a rise in the price of gold per ounce. We see gold in the next 2 to 3 years going between $1,200 and $1,500 an ounce.
I got $583 from cashforgold.com.
But are their claims really worth their weight in gold? We wanted to find out, so we got this gold wedding band appraised here locally, and then we sent it off to Cash for Gold to see who would offer us the most cash fast. First, we went to Periwinkle.
So this piece would sell for, if you brought it in, $95,
$12.30.
Another option at Periwinkle's is getting a gift card, where you would have gotten even more, $105. So how much will Cash for Gold give us for this ring? After all, they take out the middleman because they own their own refinery. And their ads say,
CashForGold.com is able to give you top dollar for your unwanted jewelry.
wow, $16.90? I'm amazed.